This week, JPMorgan Chase is reporting record financial performance for 2019.
We remain well positioned as we continue to build on our scale and benefit from the diversification of our business model.
A look at the earnings numbers and contributing factors. U.S. yields fell sharply in 2019. Could we be expecting a rebound soon? And how JPMorgan is strengthening communities in Latin America by investing in people.
Connecting people who have been left behind with economic opportunity is not only the right thing to do, it's a business imperative, because when our communities thrive, so does the economy.
Welcome to JPMorgan Chase News. I'm Kim Morton reporting from New York. Earnings numbers are in. Not only did JPMorgan Chase produce a net income for the fourth quarter of 2019 that's up 21% from the same time last year, the firm reported a record net income of $36.4 billion for the full year, or $10.72 per share. In 2019, the firm added more than 70 new branches in 16 new markets, became the first U.S. bank to be approved for a majority-owned securities business in China, and continues to invest in technology. Take a listen to what Chief Financial Officer Jennifer Piepszak said in a press call.
If you look in our consumer businesses, market expansion is an extraordinary opportunity for us, and these are really powerful markets: Boston, DC, Philly. In CIB, we just talked about China, but we have opportunities to continue to hire bankers, really talented bankers by sector and by geography in places where we're underpenetrated. In the commercial bank, we have both the expansion here in the U.S. as well as the international expansion. There, we're now in 10 countries. And then in AWM, we continue to have opportunities there as well, whether it be in wealth management or in China.
Chairman and CEO Jamie Dimon wrote that despite a high level of complex geopolitical issues, global growth stabilized, albeit at a lower level, and resolution of some trade issues helped support client and market activity toward the end of the year. You can see the full presentation, including the disclaimer, and listen to the financial results conference call on jpmorganchase.com. U.S. yields fell sharply in 2019 as trade tensions weighed on the global economy and the U.S. Federal Reserve cut rates. But could they be set for a rebound in early 2020? Let's send it over to Christina Delabono.
An end to Federal Reserve easing has left us with a relatively flat yield curve right now. Global market strategist David Lebowitz with JPMorgan Asset Management is joining me. David, even with trade tensions likely to continue, do you expect yields to bounce back this year?
So I think it's going to be tough for yields to move sustainably higher than about 2% on the 10-year. And the reason for that is, although we've made progress on trade, a lot of things remain unresolved. You look at interest rates in the rest of the world, and they tend to be lower than in the U.S., and in some cases negative. And so what this has done is led to an investment community that remains a bit cautious, but is very hungry for yield. So even if things get better and rates do go up, I anticipate that buyers would come in, pushing them back down.
Is it possible the yield curve could see periods where long-term interest rates are actually below short-term rates? And what could that mean?
We could absolutely see the curve invert again, much like it did at the end of the summer last year. I think it would mean, primarily that monetary policy is too tight given the state of affairs, and whether that view is driven by an escalation in geopolitical tensions, whether it's due by a material degradation of economic growth. I mean, that can be debated, but I do think that there is the potential for the curve to invert again sometime before the end of the cycle.
So let's talk markets too. What's driving them higher, and can it last?
Equities have been on a tear, and the majority of the move that we've seen has been due to multiple expansions, so valuations going up. And that's really been based on the idea that we're making progress on a lot of these geopolitical issues. Economic growth looks set to be better in 2020 than it was in 2019. Earnings growth is going to be somewhere to the tune of 10%. I do wonder if the market is getting a little bit ahead of itself here, but there's a lot of optimism that has surrounded markets and helped push them higher.
Great. Thanks so much for joining me today.
Thanks for having me.
Inequality, poverty, and lack of education can prohibit talented individuals from entering the workforce. JPMorgan is working towards solutions, supporting job creation and emerging talent in Mexico, Colombia, Argentina, Brazil, Chile, and Peru. In Santiago de Chile, JPMorgan partnered with Fundación Chile and solar energy companies to create a program to help train 400 people. 85% were permanently hired. In Brazil, there's an opportunity gap for many Black individuals. JPMorgan teamed up with Zumbi dos Palmares University and the Banking Federation to prepare them to join the workforce.
Eu persegui o JPMorgan, assim, como maluca. E aí um dia eu vi a faculdade divulgando o curso, o primeiro curso que eu vi na minha vida, voltado para a população negra. Então, assim, isso para mim foi sensacional, porque eu sabia que eu ia entrar num lugar que, mesmo com desafio, seria um desafio de pessoas que passam pela mesma vida que eu.
That wraps up this week's JPMorgan Chase News. I'm Kim Morton. We'll see you next week.